Wednesday, May 28th. Had a little screw up on the live, a little bit behind here, but we got a big show. A big show. It is going to be a great one for anybody. We are almost at all-time highs, just so everybody knows. So we're going to go over QQQ. We're going to go over VOO. We're going to go over the Dow. We're going to go over the Russell 2000 and leveraged ETFs. And things that I think heading into the summer have a good opportunity, specifically with leveraged ETFs and warnings about those. We're going to go over today's market because retail is actually doing well. GameStop shows up in everything. It's a risk-on market. We'll show you how to find some trades. I will go over the Alpha Picks portfolio. I talk about it all the time. But I will go over the top 4 plus 3 that I would be buying right now in the Alpha Picks portfolio. You don't have to subscribe. I'll give you the 3. It's not a portfolio. I'm not going to tell you when to sell like they do, but we will go over that. 4 stocks that hit all-time highs: Robinhood, CrowdStrike, Spotify. We will go over all of that and a fire tip. And then we'll go over earnings, because there is something that showed up last night in Okta earnings that I think is a warning for many earnings players, and NVDA is tonight. What matters in NVDA? And then we'll go over a short squeeze that happened yesterday with a stock that went up 50%, plus the return of scans. I scanned live on the air, live on YouTube, for stocks that are bullish in the 4-hour algorithm. Okay? So here's QQQ. I put this in yesterday because I was on Spaces with the Wolf Crew. Shut up and buy. That was my message on April 9th when Trump said it's a good time to buy stocks and the NASDAQ was up 11% that day. I said the best advice I got back in the early 90s when the market was like it is today with .com was, when you see the move like you saw on April 9th, shut up and buy. I did. And then the next day, we got an entry in the 4-hour algorithm at 453. Since then, in QQQ, and I put a couple $100,000 into QQQ that day because shut up and buy. Okay? I'm up 18%. Say it was $100,000. That's $20,000 I just made. I made more than that. But again, that's the power of when you buy the dip and when there's a signal and something that does this. Now that we've come back here, we're going to have to talk about what to do, because technicals matter as you head into all-time highs. It does. First, a couple of things. I did a podcast with Dustin, who is the picture of wealth. Go and find it. I will include it in the newsletter today. But it was a podcast. Laura from YouTube said it was a great one. I have my doubts about that one, but it was like 41 minutes. It was a good discussion. I like Dustin. I'll probably do it again. But go, leave him a like, and comment on the video. Okay, you can comment on Spotify. So go and listen to it on your drive. I think it does. I go over my whole history and things of that I've done, things I see in the market, blah, blah, blah. And Dustin's great. Dustin's a financial advisor, by the way. So he's got a lot more, know-how than I do. But I like Dustin, and I think his podcast is really well done. So again, go over it. It is just audio, just so you know, it's just audio. And then I also want to make sure you guys are following Tim, Stock Talk. I want to make sure you're following him. He's got a great Substack, Timothy Stock Talk, okay? Stock TOK. Because he came from TikTok. He's not a TikTok influencer. He hates TikTok. He says, but it got his message out there. He's got actual science behind this. The reason I found Tim, he called the NVIDIA top and the Mag 7 almost perfectly. He shares his stock screener. Subscribe to me. He's great. It's short form content. It is very TikTok like it's a minute and 49 seconds. And he goes over a lot of things. So go and follow Tim. Again, I'm going to link to him in my newsletter, but he is great. Now let's go on to the markets. Why is every stock tip being bought? It's because there's money on the sidelines. The dips are happening. Mike Wilson from Morgan Stanley, our research indicates, and this is a 56-second clip from the Risk Reversal podcast, our research indicates $15 billion of fresh demand coming into the stock market daily. $5 billion from retail, and $5 billion from CTAs, and $5 billion from corporates. Every dip is being bought. And by the way, remember, Buffett has that enormous cash pile. Is he loading into some of these things like SPY, like VOO, like he sold out of? Is he getting into this? So again, this is why it's being bought. There is money on the sidelines. It's not just retail. Money is coming in. What drives the price up? It is volume. And so you can see when this dip happened, look at this bottom part here. That's the volume. That's where people go. Now on the right-hand side, what are those volume markers? Those are, I can pull this lever in TrendSpider and say, okay, tell me where people bought. We're going to pull it back here, April 25th of last year. Remember, we saw a dip in 2024. So where are people holding? They're starting to hold up here. It's called volume shelves. And as they push out and as it creates a shelf, that creates your support and resistance. It's good. This is TrendSpider. Okay? It is a great tool for me to take a look at some volume levels because we see the MACD on the QQQ. It crossed down. As we went down, are we getting into a bullish one again? Again, we are at close to all-time highs, but money's coming in. Here's the breakdown. QQQ, you're less than $20 away from all-time highs, 3.8% away from all-time highs. Are you going to buy in for the potential resistance of 3.8? Maybe not. VOO, $20 from all-time highs, 3.6% away. Are you going to buy in for the upside of potential resistance from the all-time highs? Remember, nobody has bought. There's no volume shelf above there. So you've got to hope that more money starts coming in. DIA, $28 from all-time highs. That is the Dow Jones ETF, 6.6% away from the all-time highs. Okay, and IWM, which is $37 away, which is 17%. IWM is the Russell 2000. Those are small caps. So where's your opportunity? Because Qs, you may not have a huge upside if we hit the all-time highs and then pull back. Because remember, nobody has ever bought QQQ 4% above from where it is today. If your target's 5%, nobody has ever paid that price for the Qs. If your target is for VOO, 5%, nobody has ever paid that price. So you've got to hope that people find value in it. And that's where volume, so what do? Where's the opportunities? IWM, we can look at the 4-hour algorithm. How does that work on the 4-hour algorithm? Well, it actually creates 27%. Okay, it just got you out. Would you be going in even though the 17% upside to the all-time highs? Doesn't quite make sense. Remember, you're making more in the 27 positions that the 4-hour algorithm gets you in over the last 24 months. Maybe you want to wait until one of these triggers a buy. DIA, which is 6% away from its all-time high. Here, the algorithm got you in at 398. You're at 423. You've seen a little pullback. You do have confirmation. It is in pre-market down 0.04. This is why pushing into all-time highs and resistance is tough. And so I think there's going to be a trade of some short leveraged ETFs here coming up. Now, what do you want? Well, as the Qs get all the way up to their all-time high, SQQQ, which is an ultra pro short of the Qs, triple leveraged on a daily basis. These aren't things you want to hold, and you will see the 4-hour algorithm actually loses you money. Okay, these are hard things to trade. You have to find a strategy, and typically the 4-hour algorithm is not very good on these leveraged ETFs, and the reason is because these are decaying assets. The fees will typically eat away at any profits that you have, and then what happens? You see those red lines? It's reverse splits. In order to keep the actual ETF listed, they have to do reverse splits. So you've got SQQQ. Now, say you want to short the S&P 500. Well, SDS. This is the ultra short on the S&P. Now it does. The bad news is over 2 years you've traded this. You win 26% of the time because remember we're in an upward trending market. So these are very short-term trades. Again, when you get to all-time highs, this is the way that the large money plays the leverage. Okay, that's it. So I think there's going to be some trades here. I was doing some scans last night, and I have a leveraged ETF list in here. Okay, leveraged ETFs that you want to trade. One of them that I noticed was interesting was FAS. Okay, this is the financial bull. I say later this year that we may start to see financials actually do better because of deregulation. Well, this one trades really, really well. Over 24 months, 21 positions, you make 153. The bull ones create better opportunities than the bear ones. The bear ones are hard for me to trade personally. Okay, that's the problem. But I think as you head towards July with the big beautiful bill, I think gold may be a trade here. Okay, gold, even though it's been in a crazy upward move, and you can see GLD right there, just got you in at 302. You're at 304. I think gold may be a leveraged one. So what's a gold ETF? UGL. This is an ultra gold ETF. Okay, it doesn't trade very well, but you can see it just got you in at 138. You're at 139. This is a daily leveraged ETF, and I found it last night. So I'm going to put it into the leveraged ETF. Now, if you're on my affiliate program with TrendSpider, you'll now get that one as part of the watch list for leveraged ETFs. But again, this one goes into this, and this is from I forget who said. This is the minutes from the U.S. Federal Reserve. So Malek. I don't know who he is, but you can read the article. Our long-term bullish view on gold has not changed. As soon as the market believes that the Fed is going to cut rates, gold will start doing well. That's from this article. That's from TD Securities. So I do think that gold is an opportunity. Now, maybe energy could be the place. And this was interesting because this one, natural gas futures climbed $3.40 on Wednesday, the highest in a week, driven by declining production, heightened short-term demand. These factors are expected to boost gas consumption by power generators. Okay, so here's what this article says. It says that the actual production of nat gas has declined, creating higher demand. And that is expected to go through the summer. The reason is because they're doing pipeline maintenance. Okay, so we're producing less. There may be a heightened demand for air conditioning this summer. So what do you want to do? Well, maybe Boyle is the play. Maybe Boyle's the play. It's been a good ETF to trade. Just got an entry in the 4-hour algorithm at 57.74. So maybe you want to take that trade. There's gaps up above it. It has just recently, back in March, been all the way to 97. It's a triple leveraged ETF. Higher demand, lower supply. Maybe that's a good one. So the natural gas futures, maybe you want to play that one. I was looking at leveraged ETFs and TrendSpider list, and I remembered, and I talked about this with FAS, DPST. So these are regional banks. During the Silicon Valley Bank small bank crisis, this was one that we trade for huge gains. I made a ton of money in this one. It's a triple leveraged ETF on regional banks. We know that deregulation may be the big win for the second half of this year, specifically with regional banks, because they are going to need to merge. There are just too many regional banks right now. And if you open up the floodgates, they're going to merge. What might that do? That might push this one up. You just had a 44% gain on this one. Got you out, but it will get you back in. Now, remember, these are decaying assets. So these moving averages are always going to be down. So you've got to find your way to trade them. There's a complete list on TrendSpider, like I said, of the ones that I trade. So if you want to find a strategy for them, it's the last day of TrendSpider's sale. TrendSpider's having their Memorial Day sale, okay? Up to 38% off, $50 a month. Sign up for TrendSpider through Linktree. Go to Linktree, the top link, and you'll get annual plans, get the 4-hour algorithm, they get the 65-minute algorithm, they get the 1-hour stock battle, and you get all of those watch lists. And we'll go over the scans later in the show, but it's a scanner to find bullish stocks. And if you have Seeking Alpha, okay, they have an entire leveraged ETF list. And they maintain it far better than I do on TrendSpider. So you can find all 4,437 leveraged ETFs. You can find individual ETFs. You can find it all on TrendSpider. On Seeking Alpha. And Seeking Alpha has a sale. You can get this, okay? First off, you can get Seeking Alpha Premium, which comes with a free 7-day trial and $30 off if you want that. But we're going to go over Alpha Picks, and I'll wait to introduce the bundle for that one. But again, the complete line there. So today in the markets, we're going to go over this. Today in the markets, Dick's Sporting Goods, they kept their full year guidance for retail. Macy's kept their full year guidance for retail. Retail's doing good. But I wanted to bring up GameStop. Okay, and I'm not going to include a story on this one. We're not going to include anything that you have to read. Just understand, GameStop is back in the news. And I want to point out, GameStop is up 30% in 1 month. 5 days, you're up 22%. This has been a mover. Now, I'm not sure if it's the 10% short interest. I'm not exactly what it is. But the news today is that they are taking some of their money and putting it into Bitcoin. Now, they took a $500 million position. But this company has if you just go over to financials, okay, and we go to balance sheet, you can see cash and equivalents, $4.7 billion in cash. What's the market cap of GameStop? It's $15 billion. So 30% of their money of their stock price is actually in cash. That's huge. Just understand you're going to expect volatility on this one. But you can find a strategy to trade it if you'd like. You know, the 4-hour algorithm doesn't work. We can look at 1-hour stock battle because it's up 22%. Yeah, look, this one got you in right here at 28. It's at 35. So I like, there's an app you can download, Prospero. Prospero.ai, I think is what it is. And I was on there last week on Thursday or Friday with the guy, George. He pointed this out. He said, hey, all of our indicators, and all Prospero is, it's a free app that you can download and you can get. They have bull stocks and they have bear stocks. That it's as simple as that. There are tools out there for you to do that. Okay, one of the tools is to import this one, pre-breakout consolidation. This one, the scan pinpoints stocks consolidating at the top of their 100-day range with some additional filters for liquidity and keeps the focus on actionable setups. It's a great one. And again, if you get TrendSpider, all you do is click on login and import, sign in, and you can do any list. You can do the core daily stock pick core. You can do those leveraged ETFs to see if there's any there. You can do the New York Stock Exchange. You can do any index. It is great. Now, what I want to do is I want to look a little under the hood of AlphaPix. What is AlphaPix? It's a data-driven portfolio. It has beaten the S&P during the same time, almost, just over triple, almost triple. But again, it is a data-driven portfolio. They give you a stock on the 1st. They give you a stock on the 15th. We've got one coming up on the 1st. They tell you when to sell. It's a managed portfolio. So there is rules. If it gets to 10% of the overall portfolio value, they actually trim. And then they reinvest those gains back into the entire portfolio. There are rules around this portfolio, and it's managed. So it's a good one for somebody that maybe hasn't managed their portfolio. Okay, but I want to look at the top 4. They send you the articles when they buy it. AppLovin, APP, picked on 11/15. Again, the 15th of each month, 11/15/2023. Where was it? 11/15/2023. Let's go back and look. It was at the $38 range. Where are you today? $380. This one is up 786%. They've cut it because it got to too large of the portfolio. Another stock that's in there, CLS, Celestica, picked 10/16/2023. So if we go back and look at that one, in October of 2023, where were you trading? 25? It's at $118 now, up 335%. Picked 10/16/2023. Another one that was just recently picked. I say recently, it's about a year ago. 4/1/2024. This one's up 224%. Eat Brinker. Getting ready to break out again, it looks like. MACD reset itself. Okay, RSI moving up. It's in no man's land. Is it just consolidating here? Still has good fundamentals. And by the way, these are all still strong buys in the Seeking Alpha Quant. And the final one I'll go over, that was picked just over a couple of years ago, on 8/1/2023. This one's up 204%. Sterling Infrastructure, STRL. Where was it? It was picked 8/1/2023. Let's just go back to August 1st. August 1st, right there. Where was it trading? $60. It's at 191 now. So again, all of those, when you go and look at them, are still strong buys in the quant. See that one? This is EAT. And the valuation isn't crazy. It's not at its 52-week high. Wall Street thinks that it's worth $164, but the quant still says, hey, it's a good value. So 3 alpha picks I would be buying right now. Right now. Wells Fargo. It's a buy in the quant, but see, the 52-week high is 81. You're at 73. Wall Street thinks it's a $78 buy. I actually think this one could go higher. I like this one. I own this one. Am I selling it? No. If it gets to that 81, am I selling it? Yeah, probably. I'm going to trim it. Next one, AppLovin. The reason I like AppLovin, it's not at its 52-week high, which is $525. Its valuation is still decent enough. Wall Street thinks that it's worth $453. 20% upside. I like that one. Go and research the chart. Go and find a strategy. third one that I would buy right now, no questions asked, Berkshire. Yes, it is part of the Alpha Picks portfolio. Berkshire, still a strong buy. Do you see the valuation? Everything is green right there in the quant. No questions asked, buy it. So how do you get all of this? How do you do that research? How do you do all this? Well, this is why I suggest the bundle. Because you get not only an Alpha Picks portfolio, but you get Seeking Alpha Premium, which you just saw me go over. It saves you over $150. How do you get it? You go over to Linktree. Okay, it's the second one. If you want Seeking Alpha Premium only, and you want to look at those stocks and get a free 7-day trial, that's the third link. The fourth link is just Alpha Picks by itself. Either way, I would suggest you go and get Alpha Picks. And I'm going to give you a bonus because it's a top 2025 stock that is part of the Alpha Picks portfolio. It's CRDO. This is a semiconductor. I would wait until after tonight's NVDA earnings because I think this one could move. But you see in the 52-week range, it's right in the middle. Wall Street thinks that it's worth $66, which is a 5% upside, but it's reached 86. The valuation's still decent. The only problem is the profitability. And if you want to know what the profitability problem is, you go up into the AI. And you say, oh, what's the problem? Well, its gross profit margin stands at 64%, higher than the sector's 51%. But EBITDA margin at 4% compared to the sector at 10% highlights the company's challenges in profitability. I don't believe that. I still think it's a strong buy. I like this stock. And I talked about the top 2025 stocks. Here's 5 of the 10. Yesterday, OppFi up 8%, which has an entry in the 4-hour algorithm today. EAT, which I just went over, up 6%. Urban, which was up 40% on earnings, up 4% again. AGX up 3%. CRDO up 3%, which I just went over. So again, that portfolio is continuing to kill it. And the watch list, let's talk about Robinhood, because this is one that I want to buy. Am I willing to buy it at $66, all-time highs? God, let's go into the 4-hour right here. No, the 1-hour stock battle wants me to buy it, but not the 4-hour algorithm. And the 4-hour algorithm makes me 713% on Robinhood versus 670% buy and hold. But I want to buy when the 4-hour algorithm tells me to buy. And it doesn't have a buy right now. The weekly, the MACD is a little extended. The RSI at 69. Okay, we are a risk on market. This one is up almost 1%. What's another one that I currently do own, but trimmed recently that hit all-time highs? CrowdStrike. CrowdStrike, when it got to that 440, I sold half my position. Am I upset at it? Nah. I think I'll still be able to buy this one lower. We will look at a stock that went into earnings, Okta, at close to all-time highs, but it was soaring up 40%, got pulled down 15%. So I'm just going to wait to buy CrowdStrike. I don't want to buy it. Another one that I own, Spotify. You're probably listening to me on Spotify because most people do. Spotify hit an all-time high. Now the 4-hour algorithm makes you 166%. Buying and holding makes you 347, but you win 53% of the time. So buying during that 561, I did. They're going into earnings. Well, the earnings are coming up in July. So, they just had their earnings. But again, it's a very, very good. So what do you want to buy? Well, Novartis, NVTS, was up 40% yesterday. We talked about this one last week. Novartis, in the 5 days, we can go look at it. In 5 days, let's see. This one is up 40% in 5 days. 1 month, 229%. Do you want to buy this one? Well, Shai says he's holding on to it. As AI demand surges, the bottleneck isn't model size, it's power. And that's what Novartis is. Navitas. Navitas. I don't own this one. Full disclosure, I don't. I wish I owned this one. I wish I had bought it when Shai told me to buy it, because look at his position. Okay, average cost $2. Where are you trading today? $6.50. The man's a genius. He put in, let's see, he put in allocation 4% of his portfolio. Days return, he made $6,000. Total return $13,000. The position is currently $20,000, so it was like a $7,000 buy. Fantastic buy. And you may say, well, you know, the PE, it's not making money. Does valuation even matter? Because look at this. Palantir, 210 times PE, 62% year to date. Melly, 62 times PE, 50% year to date. Zscaler, 83 times PE, 43% year to date. CrowdStrike, which we just went over, the reason I sold it at 440, 135 times PE, 38% year to date. Netflix, which I trimmed half my position because of the valuation, hit all-time highs recently. I sold just under 1,000, 57 times PE plus 35%. Accent, 119 PE, up 25%. Year to date. So I don't know if valuation even matters, but if you're looking for GARP, which is growth at a reasonable price, and it's a term that you will find in every freaking dictionary on investments, growth at a reasonable price. You look at the PEG ratio. This is price to earnings and growth under 2. NVDA, ASML, Broadcom, Google, Apple, AbbVie, J&J, Coke, Lilly, Novo Nordisk, Oracle, SAP, and United Health. Maybe you want one of those. Okay? And you want to know why I love TrendSpider? This is Dan Ushman. Dan Ushman is the CEO of TrendSpider. Okay? He's a data geek and a coder. He is the one that's bringing you custom indicators. He's the one of the ones that actually built most of the strategies that you see given on TrendSpider. He trades the platform. He builds the platform. He even gives you a custom indicator right here. Someone asked me what oscillator I'm using. It's a custom version of DSS Blau Stochastics. I have no effing idea what he's talking about. The cloud behind it is a 1 standard deviation Bollinger Band of the DSS line. This is all hieroglyphics to me. I don't understand his language, but when he gives me something, I want to import it. And you can import it right here. I will include it in the newsletter today. It is unbelievable, the platform that he has built. He is a math geek. And he, you know, this is a guy who at Palantir at $8 kept telling me, you should buy it, you should buy it, you should buy it. And I was like, it's a bit expensive. And then at $20, he goes, don't sell it. Don't sell it. Now I sold it. My ass sold it. He is a great investor, a great business leader. And again, TrendSpider, their sale ends today. I was scrolling around Twitter yesterday while I was on Spaces, and I saw this guy, Steve Millionaire Habits, and he always posts some, provocative stuff. I don't know if he knows I'm a millionaire, by the way, but could you completely retire on $3 million? FYI, I have more than $3 million in my account. I thought it's an interesting question because my answer, absolutely. I mean, you have more money than you'll know what to do with $3 million. If your answer is no, then you've got to investigate why. This is my financial independence, retire early. Because more than likely, you're not saving enough and you're living a very large life, which there isn't a problem with. Okay? But at the very least, this could give you $120,000 salary that may last you for as long as you live. That's the 4% rule. So the 4%, you can Google the 4% rule, but it would give you $120,000. At the very least, say you're risk adverse. Go and buy the 30-year bond. We went over that yesterday at 5%. That's $150,000 tax advantaged every year. So I would argue the answer should be yes. And if your answer is no, then you've just got to look at your life if you want to retire early. Because there's things around that $3 million that you can absolutely do. And no, I don't have it in bonds. No, I don't have $120,000 salary. No, I'm not pulling out 4%. So just, again, figure out your life, and that's what financial independence is about. Now, let's talk about earnings, because Okta beat on both earnings per share and revenue, but they're down 13%. It's kind of interesting, isn't it? They beat on both. It was the guidance. But why do you think they got killed? I mean, I'll pull up the chart right now and I'll show you what I posted yesterday. Okay? Look at where they entered last earnings season. The last one in March, they entered 89. And then you gapped up. Now you filled that gap. Okay? But as you went into earnings, you have a gap here between 105 and 107. Where are you going to open up at? 108. Okay? Again, it was the guidance. Now, do I think this one is actually worth, 105 or 1? Absolutely. Absolutely. I think this one is a great, analyze with AI. Go and look at the stock. I think it's a good stock. And here, Amrita Roy, why I'm booking profits. She basically called it perfectly this Saturday. She said, why am I booking profits? She wrote on Substack. She said, this is just an example of when a stock runs into this. Down 10% post-market, revenue 688 million, record GAAP and non-GAAP operating profit was 238 in free cash flow. I would have rather seen it go into earnings that, with a weaker 105 is the gap that I would signal a buy. And I posted that chart yesterday. Okay. But that's what needs to happen. Now, in reverse, Box was the exact opposite. Box beat, but unlike Okta, they went into earnings a little weak with a gap above. And we can go and look at Box. Where's Box in the pre-market? Box in the pre-market is up 10% at 34. You've got a gap. Boy, guess where it is? 34. So again, I'm not calling out the companies. I'm not saying that there's, you can absolutely understand where a stock is going. But when you run into earnings like that, and you're stretched on your valuation, it's got to be perfect. That's why when you're at all-time highs, everything has to be running perfectly. Now let's take a look at NVIDIA. Where's NVIDIA going? Well, at the last earnings in February, you were trading at 132. Boy, you're trading at 135 right now. Now its all-time high is around 140. We can go and look at NVIDIA. Chris Camillo says, JP Morgan's calling a miss for NVIDIA this quarter, says consensus expectations are too high. The earnings don't matter. What matters? Here's what matters. In my mind, what matters, it's the guidance. It's the China restrictions. It's the production of Blackwell. It's all of those things. But if you come in, and again, I went over it, Jensen Huang is on Jim Cramer tonight. That might be an indication that we're looking at a good earnings. And that 140 level has been resistance. The MACD on the weekly is down at the oscillator, the RSI at 54. You are not oversold. And you're going into earnings at the same price that you were last quarter. Meanwhile, NVIDIA's earnings have been shooting up. If you go to the earnings, look at that. They're going up. Yes, their estimates are going up as well. But remember, we went over the PE of this one. It is cheaper to buy right now than it has been in years. And if you want a strategy on NVIDIA, okay, this one, 15-minute opening. Chart type strategy used. This enters long if the price closes above its 15-minute range. Look at it. Back tested, 81%. Buy and hold performance, 80%. Percentage of winning trades, 36%. So that's a strategy to do. I would argue the 4-hour algorithm is also a good strategy. for entering. It wins 57% of the time. Where did it get you in? 106. Where you're trading now, a month later, 135, 136 in pre-market. So I would argue there are ways to trade around this, but understand, I don't know where it's going on thing. We talked about leveraged ETFs. Take your pick. You can trade a leveraged ETF, NVD or NVDL. They are leveraged ETFs on NVIDIA. NVD is the short one. NVDL is the long one. Okay? And we talked about alpha picks. Former alpha picks, because they had you get out of it. That was trading weak into earnings. They killed it. Abercrombie and Fitch. And maybe I'm saying it wrong. I don't know. But the algorithm had you out. There is nothing in this that would have told me, oh my God, I've got to get into this. But imagine being the Raymond James analyst who literally yesterday said that this has tariff headwinds and they might miss. FYI, it's up 31% at $101. Is this one good? Look at the MACD. Look at the indicators. They were too low. Is this one worth buying? I mean, let's just go and take a look at it. It's a hold in the quant. Its valuation is fan-freaking-tastic. This is cheap. It's cheap because the growth kind of sucks. The profitability is great, but momentum, which we talk about all the time, this has been a shit show of a stock. Okay, it's on its way down, but they're revising it up. And you can analyze this with AI. Over the last month, you're up 9%. The last 6 months, you're down 48%. You just gained all that back. Literally, you gained that back overnight. Is this moving positive? Maybe. They beat expectations. So again, finding a stock that's beaten down, they're out there. They're out there. This one could have made you a lot of money had you just taken the gamble on it. It's not always worth it. But let's look at one stock, iRobot, up 54% yesterday because of tariff relief. Okay, this one has an enormous short interest, 23%. You want to know what else has an enormous short interest? HIMS, which I'm waiting for to get back into, 28%. But iRobot, is this one you want to actually buy into? I don't think so. But for me, again, if you're trying to trade it, you can. Now, let's talk about some scans in the 4-hour algorithm, because this is what you can do. You can scan and say, okay, where's the most recent entry for stocks in a list? The core portfolio, you've got Berkshire Hathaway. I would argue you just want to buy and hold. Buy it at 508. It's trading at 508 right now. That's where the algorithm got you in. You got a gap up above. There's no real catalyst for this one. And with the S&P at all-time highs, I'd argue maybe you can get it for under 500. But again, it's not a bad buy and hold. This one should be in your strategy. Eli Lilly. We can talk about this one. 727. This one, it's weight loss. The weight loss drugs. I don't know if it's going to be great, but I like it under $900 because as people start to get the oral pill for weight loss, I think this one's going to cover the gaps above all the way up to 900. Full disclosure, I don't own this one. One of the top 2025 stocks from Seeking Alpha. You don't see an entry here, but all of the metrics have been met. The reason you don't see an entry is because you had this entry April 14th, okay, at $8. Now it's telling you, hey, this may be ready for another move up. Where are you in pre-market? Up 3% at $13. 43 days, you're up 61%. So it's telling you, hey, we may be getting ready for another move. Would I buy it right here? The RSI is at 70. This was the time to buy it when the RSI was at 41 and the MACD below its oscillator. If we look at a weekly chart on this one, it's still down there, not crazy overbought, could be going for another move higher. Now, an ETF, a Vanguard low-cost ETF, which I have a list for. This is developed markets. We talked about this yesterday. The algorithm got you in at 48 here. This one makes you 31% to trade over the last 24 months. These are developed markets. So again, this one, not my thing, but it got you in there. Booking Holdings, Corning, GLW, Lemonade, which is a huge swing stock. Let's look up Lemonade. This one got you in at 33. Is this one you want to buy? Because the MACD down here on the weekly, you're down low, your RSI at 54. Maybe that's one that you want to get into. There is a huge list. One of the leveraged ETFs that I have in the list that I scanned against. TMF. You want to know what this is leveraged? It's a 3 times leverage on the 20-year treasury. Okay? You may say, well, the performance says it loses you 12%. Yeah. But if you bought and held this one, you've lost 53% over the last 2 years. You make some money off of this one. Not one that I particularly like to trade. You know, and spider sectors, XLP, the consumer staples. I don't like this one, but maybe this is one that you want to trade. Because as this one, lagged, look at the MACD. It totally reset itself. You make 10% over the last 24 months, 23 positions, 52%. I would argue it's not great to trade, but maybe you want to own it. One that maybe you want to buy the dip on, XLV. XLV makes you 5% versus actually just being even. Okay, on the 4-hour algorithm, you got a gap up here at 141. Maybe this is one. It's cheap. The MACD on the weekly, super low. The RSI, 36. So again, these scans help. I get these scans emailed me on a daily basis. That's why I don't do them live. If you want to see me do them live, you can tune into YouTube. But again, that's it. So if you have any questions, I am an open book right here. Go to the email address on Linktree or just respond to the email that I send you on the newsletter. The newsletter is 100% free during the week. I've got a new one coming up, which is the technicals. This education section is for the paid subscribers. It's basically like paying $700-800 for a freaking course. You can get it for, a couple $100 and support me. If you listen to me and want to support me, that's how you do it. And I try and give back. And that's the whole deal. That's the whole show. Again, remember, we are close to all-time highs. I don't want you thinking, oh my God, I'm going to kill it in QQQ. And then all of a sudden we make 3% and you pull back from all-time highs. We are in a decent market, but you can be taken down from a tweet. And if those tariff extensions continue to be pushed out, at some point, the boy that cried wolf. And if the Fed doesn't cut rates or even raises rates because inflation starts to come back in, understand what the market is telling you based on technicals. The technicals will always lead you there. Will it always be right? No. But between the technicals and the fundamentals, you can find stocks, you can find leveraged ETFs, you can come up with a strategy and take your positions. That's it. Have a great day. I will talk to you tomorrow. Maybe I'll go live for NVDA earnings today. I don't know. I'm not that well planned out. We'll see what the afternoon brings me. Okay. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to